Hello, fellow traders. Tis I, the Rumpled One, coming to you Tuesday, January the 21st, the year 2020. Let's talk trading direction. That's what trading is, basically. It's a game of direction. You pick which direction you think price is going to go. Is it going to go up or down? Is it going to increase or decrease? It's a simple game of picking direction. What makes that so difficult? Well, part of the problem, I believe, with choosing direction is because we learn concepts in trading. And a lot of those concepts are not necessarily based in reality. I mean, we talk about supply and demand. We talk about support and resistance. Some people talk about trend. Other people talk about who knows what. But on any particular trade, you're basically saying, I believe price is going to go up and it's going to go up enough that I can make a profit, or I believe price is going to go down and it's going to go down far enough that I can make a profit. Pretty much that's it. But a lot of times we get it wrong. We enter the market and price goes the opposite direction. We might be looking for a breakout and it reverses. We're looking for a reversal and it breaks out. That's just the way it is. We're not going to be right on each and every trade. Sometimes we're right. In other words, we picked a direction. Maybe we could have had a couple of pip profit, but we decide we want more and we wind up taking a loss. Well, see, the thing is, taking that loss shouldn't be that big of a deal, especially if you have your risk management in place. Because if you take a loss, you're not going to lose any more than what you were willing to lose in the first place, because you can't win every trade. It's like going to the casino. You put down $5 on black on the roulette wheel or on the no pass line. And if you lose, well, you lost $5. You knew going in how much you could possibly lose on the next roll of the dice or the next spin of the wheel. You're not going to lose any more than what you put up there. So when you're trading, make sure you have that same mechanism working in your favor. And in the case of trading Forex or trading, say, the stock market, you actually have a mechanism called a stop loss to keep you from losing more than you're willing to lose on a trade in case you get the direction wrong. So, boys and girls and fellow traders, you really have to understand that these videos are for educational purposes only and that your results may vastly differ from mine and that trading is very, very, very risky. So, if you need trading advice, investment advice, financial advice, you need to get your advice, seek it, and get it from an accredited financial professional. That way, if you lose your money, if you lose all your money, you got your advice from an accredited financial professional instead of from some guy who makes YouTube videos or post on a trading forum someplace. Okay, disclaimers out of the way. Looking at the weekly chart here on the dashboard, all the gaps filled, boys and girls. So, we do this every week, and more times than not, all the gaps fill, some bigger than others. And, we had some pretty big gaps on a few of those pairs this week. So, if you didn't get in this week, maybe you will get in next. And something else just to remember, there's this gap right here on the dollar yen that hasn't filled. And in fact, there's also a gap right here. It's only like, it's really like not even a gap because this close and this open were pretty much the same. And but we are looking maybe to close this gap right here. Also, not to, we've got that. I believe we've got these are the weekly pivot dots as opposed to the mid dots. And if we look at the daily, 120 pips above that yearly open here. Let me bring up the euro for that one trader that asked me to also show some euro. Here we're down 114 pips off the yearly open. And I'm still looking for this big candle for price to come down here. This level right here. It may or may not. We'll just have to wait and see. Okay, we put in an inside bar yesterday on the daily because it was MLK Day. Not much happening. And you see here, we broke that low. Now we're down 14 pips. So yesterday was a small range, and as I mentioned, I thought price would break out of it, but your results may differ from mine. Looking at the weekly buy zone, you see here that trade at crossing through the weekly open would have paid off 10 pips or more. Price came back, gave you an opportunity to go long here. Now, if you did go long, as you can see, you didn't even get 5 pips, but a short here would have also been profitable. Just trading horizontal lines. And here's the inside bar. Even though these levels, high and low, yesterday we just saw previously how price dropped right through it. Oh, let me bring up the euro for that trader. And if there's another trader out there that would like me to review another pair, feel free to ask and I'll try to work it in for you. As you can see here, we got into that daily inside bar. That was 19 bars ago. Let me scrunch the chart so you can see it. And we did exit to the north once. That would have been a nice little trade there. And that's how those things work. Range only 4 pairs over 100. Once again, price dropping out of the previous day's low. Highest open, lowest open. We put in the weekly high. Early in the trading day, price dropped right through it, dropped through the monthly. Daily highest open right there. And you can see what happened next. Looking at the buy zone, you can see the pivot was right near the open, so that got taken out with little to no effort. And we've already seen how prices dropped through the short zone a couple of times. Range too low here on the euro. We also have range too low for the rat traders. Now, looking at the dollar yen, I mentioned that weekly pivot yesterday, and you can see price came down and took out that pivot. But once again, boys and girls, your results may differ from mine. So, I call these out. I point these things out. This isn't a crystal ball. This is just using statistics, knowing how often these levels, these pivots get taken out. You can see here, we're looking at dollar yen once again, taking out these pivots. We can switch over to the weekly. You can see that pivot got taken out. Looking for this one to get taken out. We'll bring up the euro. As you can see, the weekly pivot's already been taken out. and the daily pivot was taken out, and it took out yesterday's missed pivot. So sometimes you have to wait a day or two or more for these pivots to get taken out, but usually they get taken out. Okay, as you can see, price opened between the 10 and the 20, didn't stay in there. It broke out to the north, broke out to the south, but the point is it didn't stay between there, even with, once again, we got 36 pip range. Price can't stay between these two lines. I mean, that's just a fact. It's physical, it's mathematical, it's geometrical. I mean, and statistical. It just won't stay. So that's why these trades can pay out. You just have to be patient. You have to, believe. You can't be greedy. Sometimes you just have to see what price action's telling you and trade accordingly. Just like the wick zone. Once again, there wasn't much of a wick from yesterday, but that makes it even more likely that price isn't going to stay in there. You just have to guess or choose which side and trade accordingly. Horizontal line trades paid off. As you can see here on the Einstein line just recently, from when I opened the portfolio, long trigger, and it was good for about 3 to 4 pips. Once again, if you're trading heavy, and that could be 30 or 40 bucks or 300, 400 bucks or 3,000, 4,000, depending on your account size, your buying power, your leverage, and your risk. Looking here down at the tick level, you can see it's just oscillating about 3, 4 pips at the most. Nothing to write home about. On looking at the range, you can see we entered the lower ATR zone and price reversed out of it. Price entered it a second time, and price actually entered it 1, twice, 3 times, 4 times, 5 times, and exit out of it. Our range today, once again, is 35 pips, and the weekly range is 35 pips. And the average weekly range over the last 24 weeks was 131. And the average daily is 42. So you can see we're well below the average. And here, as you can see, we took out a whole bunch of highs and lows. Coming down, we just took out a whole bunch of lows. And so now we can look to see we're going to take out either a high or low here. And for those of you just tuning in, this is over the last 1,000 bars, we had 148 red, 1 in a row, 132 green, 1 in a row, 70 red, 2 reds in a row, 53 green. And I know the funny thing is I should probably change the colors here, because the black candles are the red candles, which are the bear candles, and the white candles are the green candles, which are the bull candles. So I should probably switch that. Let's see. Oh, I don't have it on this chart. I did something kind of funny here. Somebody asked me a question. I was going to say, well, the TRO HL5 will do just about everything you would want. And then I realized there's one thing it doesn't do is show a current MA price. So I decided, even though I don't like squigglies, I'll say let's put in where you can say I've got the 50 period moving average, where let's just find out where that level is. Because some people like to use it for lots of different things. So right here, I've added the moving average to the TRO HL5, and you can see it here for the 1 hour where the moving average is. So that'll be in the next update. So I just did that because I could. So boys and girls, just remember, It's not what you trade, it's how you trade it. So go out there and drain the